Hello, good weekend. It is the 19th day of January 2013, and it's that of a Saturday. So welcome to the multiple time frames video on the dollar index. Let's get started with the most longest term time frame, move on, and then finish off within the weekly chart. So 4 different time frames starting with 106 days, which means each one of these candles has a lot of data within it, just bringing us back to the early 1970s. Now, I've talked a lot about this 80 level, an area that has been pierced below support here, massive support here, again here, and now for the last half decade or so has been chopping back and forth. Overall, very much a bearish looking setup, as we can see this 18 average, which has been in that of a declining mode. And also, we'll take this better on the other charts, but you can see these highs lower, and making also really an uptrend of majority higher lows along the way, thus creating a symmetrical triangle. Again, we'll take a look at that when we shorten out the time frames just a little bit. Therefore, now let's take a look at it from, instead of this high to this low, let's take a look at it from this high. And to do that, we'll take a look at this on a 32-day time frame. So there's that high that I've been referring to and that low, with 2 different resistance tests amongst this area of about 87, which is a 38.2 Fibonacci retracement level. Since then, of course, a lot of sideways action. It is a lower high here right now, and therefore the question is, what's the next level going to be taken out? This one here or down below here? Because quite frankly, it's a neutral within a bearish setup, so the odds would favor it to be this one down in here. Move this on to the 3-week chart. Each one of these candles now representing 3 weeks. And just to show you what the highs and the lows would be, it is this low and this high. So now back to the 3-week chart. And here we go. Lots of choppy action. So you can see these highs. Technically, this one was lower. And so is this one. So you got this low, higher low, lower low, and then a bunch of higher lows. So for the most part, making a lot of higher lows and lower highs. However you want to draw the trend line. I think maybe this might be something in there. So we're pretty much coming to the conclusion of this symmetrical triangle. But if it breaks the downside on that, you can always say, well, maybe the trend line is going to be this here. And we got a long ways to go before this triangle comes to a completion. Final chart is the weekly chart. And in here you can see a little bit of a head and shoulders pattern. It's been commented within my channel a few times. And here you have a left shoulder, you have the head, and you have the right shoulder. Now the area of the neckline, this Fibonacci support, and at 79.86, and of course 80 is large, but the support level is pretty much around 79. And this entire head and shoulders pattern, we take a look at this again, is just this little correctionary phase within this flag pattern, which is fairly bearish. To summarize, the greenback, or the US fiat currency, it's all in comparison, the DXY, the dollar index that is, to, well, other currencies like the Canadian dollar, the euro, the pound, and a bunch of other ones, but they all pretty much work the exact same way. And interestingly enough, I've been able to find the old Canadian-US crossings over the last 100 years, and it really doesn't fluctuate too much. Usually in between 0.5, 1.3 in that range for the most part. Right now it's pretty much evenly par, and it has been for years. But inflation goes through the roof because of how these things are created. And back in the day, this is a Reichsbahn, it's the German Weimar Republic, and it went collapsed big. And all fiat currencies in the past have collapsed. And it all happens relatively fast when the end cycles are coming into play. You can say it's going to take years for this to take place, and I do think it will, but it's already been 5-6 years since it's pretty much started. Therefore, you look at the math. What's the odds that say this is still going to have value in 10 years from now compared to this? Thank you.